Welcome to the Capitalized Life YouTube channel. I'm Matthew Johnson, President and owner of Johnson Wealth and Income Management. I do hope you enjoy today's video. Here's a question for you. Do you understand the concept of income versus cash flow? So I was dealing with a client the other day that was discussing his pension. And the question that was really up for grabs was, what does he want to do with the pension? Does he want to take the pension and keep the pension a pension? Does he want to take that pension and receive the settlements from it every single month once he's retired? Or does he want to execute his right to roll that pension into an individual account? Well, the concept was pretty clear in his mind. He knew that as long as he kept the pension a pension and he received these payments, he would get paid a monthly sum every single month. But the problem is that when he died, that pension may continue on to his spouse. In fact, it's likely to continue on to his spouse. But when both of them died, it was not going to continue on to his children. Now, what if he took that same exact pension and he transferred and rolled tax-free that pension into an individual retirement account? Well, two things, a pro and a con, a good and a bad. The first thing is that if he took that money from the pension and he rolled it to an IRA, now in his mind that money became his. That was his money. That was his principal. The company that he had worked for 38 years for is saying, here you go, take the money, it's yours. Now, when he goes to invest that principal and he's putting it to use and he's earning interest and dividend income off from that principal, chances are he's not going to make quite as much income off from that principal and that rolled pension as he would if he would have kept it as a pension. But the issue to him was this: if I'm going to be making, say, 95% of the income that I would receive if it were a pension, by keeping it an IRA and rolling it to an IRA and making that principal mine, I'm selling my soul to the devil for just 5%. Now let me explain to you. You see, he didn't want to give up the control of the pension. He wanted control of that principal, because when you turn on a pension, that's it. It's like Social Security. It's an irrevocable decision. Or to my friends out east, it's irrevocable. Okay? Talk about taking a word and making it even harder. But the idea to him was, if he rolls that pension into an IRA, now that pension becomes his. That principal is his. And he can take the income, getting nearly as much off from that principal in income as he could if it was a pension. But now that $400,000 of rolled pension principal, because it's his, if he wants to take it and access it, if he wants to spend it, he may do so. A pension never gives you that opportunity. Once you sign the dotted line and the pension payments start coming to you from IPERS, they start coming to you from Snap-on, they start coming to you from whatever corporation you work for that offers you the pension. That pension payment, that's it. And if you need more in that particular month, too bad, because you've agreed to that settlement. So today I ask you to consider the real difference between cash flow versus income. Income is when you have accessibility to principal and the principal is earning you interest and dividends. And you can spend those all day long. But if you need to spend the principal too, you may do so. So, there's your tip for retirement success. For those of you that do have the pension, it's an important decision, and it's one that you need to be careful when you make that settlement decision. So if you need our help, please, I encourage you to reach out to us, give us a call. I'll take the time necessary to help you understand what your options are, and you can weigh the pros and the cons between income versus cash flow. Make it a great day.